Hello everyone, welcome back to my channel. I'm your host Miss KK and this is The Wave. Today we are talking about investing and in particular how to read a fund fact sheet in deciding which unit trust, which mutual fund or which index fund to invest in. I'm choosing unit trust in particular because it seems to be popular amongst the young professionals, and I also saw last year some of the bank increasing the minimum deposit required to a unit trust, and I think it's because a lot of us that have unit trust don't seem to quite understand how the unit trust business model works, because a lot of us are sometimes using it as a transactional bank account where we are frequently making small deposit in the account and regularly withdrawing money from that account. But if we are doing that, it might cost the fund itself a lot of money to keep selling securities, because some of these things are invested in long-term assets, and if the fund is constantly having to sell the security at short notice, it might mean that sometimes they sell it at loss just to make sure that they are able to make the payout to the members that are withdrawing from the unit trust. So this video is trying to consolidate that gap in understanding, in making sure that we understand how unit trusts work and we understand the fund fact sheet, which is actually supposed to be our starting point when deciding in which unit trust to invest. This video is also inspired by two events that I saw on social media over the last couple of months. Number one, the lady that invested her inheritance money in an investment that was being offered by her boss. And number two, a video I saw on Carte Blanche about investors that fell prey to a Bitcoin scheme in South Africa that was being sold by a popular radio presenter. And in both of these cases, the victims actually admitted that they didn't understand the type of investment they were getting themselves into, and they were actually relying on the person on the other side of the table to have their best interest at heart and to make sure that they actually do generate the returns that were being promised in this investment schemes. So I couldn't help but wonder why they were in those situations, and if there are actually quite a few of us that are in similar situation where we rely on bankers, investment managers, our friends and families to basically just tell us which investments are a good option without actually doing our own independent research. So to be able to try and bridge that gap, I went online and I googled the Capricorn Premier Fund. I picked Capricorn because they have quite a range of unit trusts available, and these fund fact sheets are there to help you as a potential investor in understanding what the fund is all about, how the fund has performed, what the fund has invested in over the last couple of years, what the fund's fees are, and ultimately help you get to that conclusion whether this particular fund is a good one to invest in. So I'm going to be going over this fund fact sheet in highlighting some of the things that I actually look at before I decide which fund to invest in. So the first thing is actually the risk profile. So we all have different risk profiles. Some of us are very conservative and some of us are quite aggressive when it comes to risk. So if you are conservative, it means that you personally are that person that likes your capital being safe. You don't really care too much about high returns for as long as the money that you invested in is guaranteed to come out plus a little bit of a return, you are happy with that. Then you have the people that are on the high end of the spectrum where they would like to take a gamble with their money a little bit. They are prepared to lose some money, but they do know that if the market performs according to what they hope for, they will make a lot more than people that are conservative. So the fund fact sheet would tell you which type of risk appetite you should have in order to be consistent with the goals of this unit trust basically. So on this Capricorn Premier Fund, they are actually assertive, meaning they are on the people that are more aggressive and not the conservative end. So if you look at this fund fact sheet and think to yourself, I'm more a conservative investor, but this fund fact sheet is telling me that I should be an assertive investor, that means this is not something for me. Or you could be looking at this and say, I'm just starting off, I'm relatively young, I can afford to take a little bit of risk, therefore I'm more than happy investing my money in a fund that has an assertive risk profile. But you could also be like nearing retirement, say, hey, I'm actually just 5 years before retirement. If anything, I'm looking for capital stability. I don't really care too much about capital growth. Therefore, this fund is actually not something I'm interested in. So that's the first thing that I just watch out for, is the risk profile. The second thing that I tend to look out for is asset allocation. The asset allocation really just tell you where is your money invested in, and they would normally give you the type of investment your money is going to and the weighting. And there are different type of investment. You normally have interest bearing. So if things are interest bearing, this include money markets and bonds. You may have properties. These are generally investment in real estate company. You may have equities. These are normally investment in shares. And then you may have foreign equity or foreign cash. So the type of assets that the fund is investing in also determine the risk profile. So the more assertive the fund is, the more high risk asset it's likely to actually invest in, and the more conservative the fund is, the more low risk, like your money market and your interest bearing instrument, the fund is likely to invest in. They also go as far as telling you what's the top 10 holdings, in which companies are they investing in the most. So really this is just to help you understand the type of asset your money is invested in, the type of market your money is invested in, and which of the top 10 holdings are making up your investment. The next thing that I look at when evaluating the fund fact sheet is historical performance. That just tend to show you how has the fund been performing over time. They tend to give you the performance over a short term, medium term, and long term, and also since inception. So in this fund fact sheet of Capricorn Premier Fund, they've given you what the historic performance of the fund was for a year, for 3 years, for 5 years, and they'll normally put it in terms of how has the fund performed in terms of the benchmark, what they were actually targeting to achieve, and how have they performed in terms of CPI, which is normally inflation. So overall, you want a fund that is performing at least above inflation, because that means your money is actually appreciating in value. And you also want a fund that is actually beating its own target, because that means that the fund is actually realistic when setting their goals. So if we look at this fund fact sheet, they've been able to outperform inflation, because if we look at inflation of 4.51 over a 1 year term, and they actually performed 9%, that's a lot. And also if you look at a 5-year period where inflation is 3.6% and they've actually done 6.13%, that's quite a lot. But over a 5-year period, they've performed below their benchmark. They're hoping to get to 6.8 and they only got to 6.13, but that is relatively still within range. So really the historic performance is to just help you, if you were to actually invest in this fund, how much would you realistically expect within a 1-year period, 3-year period, a 5-year period, and longer? And the reason why I actually put this is because someone asked me to touch a bit on how do you determine what is a long-term return that you can expect on a fund. So if you want to see realistically how much of a return investments actually out there are offering, put together a whole different unit trust, put together a whole different mutual fund, and see over a long-term period how much were these funds able to generate for their shareholders. And realistically speaking, if someone is offering you a return of 8% relative to these funds that you're actually seeing here, is that a realistic return or not? The other thing that I normally tend to look at is the fees associated with the fund. Remember, fees are going to be deducted from the return that you're making, and it's either going to make your investment worth it or not worth it, because sometimes funds can be generating a higher return but the fees are also higher, meaning technically that you as an investor are not really making money out of it. So there are different type of fees that are normally attached to fund fact sheets. There's normally an initial fee, that is the fee that you pay when you sign up. That is generally a once-off. Then you have your investment platform fee. Maybe you have an access to an online platform where you can go and view the fund performance at any point in time. You can go and pull your statement whatsoever. So they generally, because they're investing in money to actually manage that platform, they may charge you a fee for that. Then you have your annual management fees, and it's normally a percentage of the value of your investment at that point in time. So basically, those are the 3 types of fees. So in this fund fact sheet, they're actually saying there's no initial or investment platform fee, but there's actually a 1% management fee, annual management fee. So when you get your investment certificate at any point in time, you must take into consideration that they are actually, deducting 1%, but it's normally withheld from your fund value. So it's not something that you generally get to feel, because the money you get is already after their fee that they've taken over. So what I then did when I was doing our investment assessment at the end of Q1, I put together a few unit trusts. I put what their historic performance was, I put what their annual fees is, and I took the fund that had the highest return at the lowest fee. So you need to be able to do a comparison of a few funds in determining which fund is actually worth your while. But obviously some funds may have a low fee, but the risk appetite might be high, which might not be consistent with your strategy. So you need to make a decision in context of your other information, not just on fees and return alone. Then I would also look at the frequency of distribution. How often do they pay out dividends to the shareholders or to the unit holders? Actually, not shareholders, unit holders. So in this case, they actually distribute on a quarterly basis. So that means every quarter you can expect a distribution. This distribution sometimes is paid to you as a unit holder in cash. Sometimes it's actually reinvested, meaning you actually buy more unit in the unit trust with the distribution that is given. So if you are looking at the distribution, you should also look at it in context of where you are in your investment journey. If you are just starting off, you may not need the distribution right away from the unit trust. So you don't want a fund that has a quarterly distribution in cash. Maybe you want a fund that has quarterly distribution, but there's an option to reinvest the money. But if you're heading to retirement and you're really looking for a consistent income distribution, you may decide you want a fund that has a frequent distribution because you are relying on that income in order to be able to actually live off that money. And lastly, you can have a look at the fund managers. Who are the fund managers? Are they reputable? Are they managing other funds? Do they have a history of performing? I wouldn't really pay too much emphasis on the fund managers because the banks or the providers of these funds would have already done their homework in choosing the best fund managers. So really, that is all I had to say about fund managers. So I would normally look at risk profile, asset allocation, the fees, and also, before I forget, the minimum deposit required. So like this fund is about 75, you need to invest in about 75,000 to be able to access this fund. And I've seen a lot of the banks and the investment companies increasing their minimum deposit required to just making sure that they are accessing the right pool of investors. So if you're someone that is actually looking to invest in a unit trust, you must be prepared to save up some money in order for you to be able to make the minimum entry to be belonging to a particular fund. Yes, so really that's all I had today from the unit trust video. Please let us know if this video has been useful. Give us a thumbs up if you enjoyed this video. Give us a like, share the videos with your friends and family. And if you haven't done so, please subscribe in order to help us grow this amazing community. That's all I had from today's discussion. Until next time, it is goodbye.